Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, July 21st, 2021, and I'm pre-recording this Trading Places Live for Thursday, July 22nd. Futures currently are up slightly after a pretty nice day on Wednesday. It looks like things are still pointing maybe to a slight positive open on Thursday. We'll see how things evolve overnight. But at least for now, things do look like we'll get off to a decent start. Before we get into all the action on Wednesday, let's go through the agenda for the show. First, we're going to start off with the daily market recap, as we always do. Then we'll get into talking technically, momentum sleepers, U.S. versus global markets, earnings spotlight, and then we'll wrap up with the three you must see. Before we get into any of that, let's head over to earningsbeats.com, where if you're not already a free Earnings Beats Digest subscriber, you can join our community. Simply type in your name, email address, hit that subscribe button. This is a free newsletter that we do publish 3 times a week, Mondays, Wednesdays, and Fridays, usually before the market opens. There's no credit card required. You can unsubscribe at any time. We'd love to have you. Most of the topics revolve around relative strength, earnings, many of the things that we look at Earnings Beats. I think it's a very educational newsletter and something I think that will help improve your trading. So just go over to earningsbeats.com, make sure you sign up. Let's move on to the daily market recap. So on Wednesday, we had a pretty good day in the market. Dow Jones Industrial Average up 286 points, or roughly 4/5 of 1%. The S&P 500 up 36 points, also up about 4/5 of 1%. NASDAQ on a percentage basis up slightly more. It didn't start out that way, but we did have a pretty nice day throughout the day. The NASDAQ finished up 133 points, which was about 9/10 of 1% higher. Mid caps and small caps again outperforming. So for the second straight day, really good action here. Mid caps managed to get back up through and close above its 20-day EMA. So that was really good news. Small caps tested the 20-day, but we still have a little work to do to get through. Mid caps up 1.22%, small caps up 1.72%. So really good action there. Not too surprisingly, energy, the leading sector. So anytime we see small caps and mid caps performing well, a lot of times you will see that energy group doing well also. Energy up 3.49%. The XLE, after going down testing or getting close to testing that April low down around $46, we have bounced off of it. I would watch that declining 20-day EMA. I think that's going to be a big level for the XLE. Let's see if we can get through it. Once we broke down below that level back at the beginning of July, you can see we did bounce. Our reaction high went right up to that 20-day and failed, went down to a new low. So we do want to watch that 20-day. Financials rebounded nicely. We'll talk about the 10-year Treasury yield in a minute, but we did have a nice day on the yields moving higher. Of course, that means bonds were sold off. But anytime you got yields moving up, that tends to be a headwind, or excuse me, a tailwind for financials. So that's what we saw on Wednesday, and financials bounced nicely off that 35 level on the XLF. Materials up about 1.1%. It has been struggling. This group's been struggling in its 20-day EMA. That is declining, and we're coming back up for another test. We'll see if we can get through, but I would be watching that 82 level pretty closely there. Utilities, after trying for weeks, months to get through about 66.5, couldn't do it. We're rolling back over. Today down 1.1%. So utilities, the worst performing sector by far today, and we did close back down near those moving averages. As far as the industry groups go, recreational services, best performer. Now, this has been a group that's been beaten up pretty badly over the last 5 to 6 weeks, but the last 2 days, very strong action. We were down to about 83, 84 on this index just 2 days ago on Monday at the intraday low. But by Wednesday's close, all the way back up near 97. And that 20-day EMA coming in at 99.45. So that's going to be a level to watch. PPOs very weak. My guess is we are not going to get back above 100. I would think 98, 99 right in there is probably going to cap us in the near term, but we'll see. Moving on to the 10-year Treasury yield. First, I do want to mention that on Thursday, we will get the initial jobless claims coming out at 8:30. Last week, 360,000 claims. This week, we're expecting 350,000, so a little bit of a drop. June existing home sales, 5.9 million units. May was 5.8 million units, so we're looking for a little bit of a tick higher there. And then finally, June leading indicators. May rose 1.3%. June, we're expected to rise about 1%. So still rising, but the rate of growth there a little bit less than what we saw in May. All right, looking at the 10-year Treasury yield chart here, clearly still in a downtrend. Until we can get back through that 20-day EMA, I would consider this a continuing downtrend. But the reversal the last 2 days certainly has helped both financials and industrials on a relative basis. So as long as we've got that yield moving up, and I think we have a chance maybe to get back up to that 20-day moving average, that's up at 1.36%. If we can get back up there, that certainly would help financials and industrials continue to move higher in the near term. But another reversal and move back down to the downside with new lows would be very bearish, not only for financials and industrials, but I think would be bearish for the market overall, as it just suggests that the market's getting more defensive moving into treasuries. That's what sends the yield lower. So watch that yield. If we move higher, I think that's good for the market. If we move lower, I think we need to remain a bit cautious here in the near term. All right, let's move on to talking technically. I thought we'd start out just by pulling up the long-term weekly chart on the S&P 500. Even though we've pulled back earlier this week, got close to that 20-week EMA, you can see that anything close to or testing that 20-week EMA has been a great opportunity to get in to this market. And that continues. I do want to point out, however, that volume has been shrinking. And as volume has been shrinking, prices have been moving higher with a lower weekly PPO. So that is maybe a sign that the market could use a little bit more unwinding. Don't know if we're going to see it throughout the summer or not, or the balance of the summer, but we are past July 17th, and historically we know July 17th to September 26th is the worst time of the year, dating back to 1950 on the S&P 500. So I would just, maybe rein it in. I'm not going to suggest that you not be in the market on the long side. You really want to be careful when you're in a secular bull market. You still want to participate, but I would just say maybe you want to be a little bit more cautious, and everybody's different. Maybe that means just having, puts on the S&P in the event that the market pulls back. That will help protect your portfolio. Maybe if you have individual stocks that are optionable, you could consider maybe doing covered calls, where you sell calls against your position. That limits a little bit of, it helps protect you a little bit to the downside. But if the market keeps going higher, you're going to get your stocks called away. You'll make a little bit more money, but you could lose out on your stock. So, those are just a couple of things. Obviously, you can just move more to cash, have less in the market. You can take smaller position sizes, lots of different ways to address a market that maybe has a little bit more risk in it, which is what I would consider this one right now. All right, in addition to the S&P 500 though, and some of the risk there, I did want to just mention the growth stocks versus value stocks. So this is the Dow Jones US Small Cap Growth Index divided by the Dow Jones US Small Cap Value Index. So if you look back this last 5 years, it's a daily chart, and you can see if you connect the lows coming across here, you connect the lows back in 2017, 2018, and then again, just in May of 2021, we clearly have an uptrend in play. So growth stocks continue to be the the stocks of choice in the market. We've bounced. We're starting to move back to the upside. I like the fact that we had a period of lower relative strength. We had lower lows, lower high, lower low, lower high, lower low. Now we have a higher high. So it does look like money is rotating back into growth versus value. But this is small cap growth versus small cap value. The next chart I want to show you is small cap growth versus large cap growth. So you can definitely see growth is outperforming value, but not all growth is equal. And so on this chart, I've got the DJUSGS, which is the Dow Jones US Small Cap Growth Index, divided by the iShares Russell 1000 Growth ETF. And the Russell 1000 Growth ETF is made up of a lot of the large cap growth stocks. And you can see that the small caps versus the large caps significantly underperforming. So let's look back. Let's go back and look at the small cap growth versus small cap value. Clearly, small cap growth is doing better. But when we look at small cap growth versus large cap growth, you can see that we've been in a consistent downtrend for the last 5 years. So we had a big move coming off that September low through about early March, late February, early March. But since then, you can see small cap growth really underperforming large cap growth. And that can be a problem. I don't know if we're going to continue to see that, but we do have 5 years now worth of data here suggesting that the small cap growth, you shouldn't be expecting as much out of those as you might be the large cap growth. All right, moving on. I'm going to talk a little bit about some momentum sleepers. So before we get into the charts, momentum sleepers, I guess there are different ways you can categorize these stocks. But one of the things that I look at, number one, I want relative strength. Number two, I want a pullback. That's how I kind of define momentum sleepers. Strong stocks on a relative basis, but currently not performing great. So the way I ran a scan for this was to look at scooters over 95. So that's scooters, SCTR, that's StockCharts technical rank. And with scooter scores over 95, it's telling us that these are stocks that relative to their peers are among the best stocks out there. The RSI was used below 50, because any RSI below 50 suggests that we've seen a recent pullback. So we got high relative strength, low RSI, suggesting a pullback. And that's how I came up with these stocks for the momentum sleepers. So first, let's take a look at Build-A-Bear Workshop. This is BBW. And I think it's pretty obvious when you look at the chart. I mean, this is a stock that a year ago was trading down probably close to $2. And in June, got up over $20 and has since pulled back. We got back to about 14 just a couple of days ago. Now we're trading at 15.70. But looking at the last 6-7 weeks, we've been going sideways for the most part, with support right at about this 14 level. And you can see the 50-day moving average coming in right now at 15.20. So it just seems like we've been pulling back after a huge move up in this particular stock. So this is one that I think certainly could take back off again. And that's what we're looking at for momentum sleepers. It's not that they're, necessarily at a major support level, but these are stocks that had done very well, have pulled back for a period of time, and look like they might be poised for another advance. All right, so the first one, Build-A-Bear. Let's go on to the second one, which is CRTO. This is Criteo. Stock got up to about 45 in June, then moved a little bit above that at the end of June and early July. getting up maybe to about 46.5, 47. We pulled back into the 30s just recently, and now we're starting to turn back to the upside. I love the AD line, which has been very strong throughout. Price action's been moving up. And this is also part of the media agencies group, which is trying to break out to a new high. You can see right here, multiple tops above 850. Haven't been able to get there yet. Certainly would help this stock if we get a breakout in the group. To the downside, on a relative basis, I would simply watch this area here. This is the media agency group relative to the S&P 500. 0.175 seems to be a pretty good support level. We did just get down to 0.18 recently. I want to hold that relative support. But you can see we've been sideways consolidating. This is a stock also that has gone up considerably. It was about $11 or $12 back in September. Got as high as 46, 47 recently before pulling back. So definitely a little bit of momentum sleeping here. TGLS. This is Technoglass. Huge move up like the others. Just from March through May, 3-month period, stock ran from about 7.5 to 24. So a huge move, more than tripling in 3 months. But since then, we've fallen from 24. We just went back down to about 17 and change. This seems to be an area of support right at about 18. We went just below it, and now the stock is starting to recover back to the upside. I'd like to see volume, more volume come in and a move back through the moving averages. That would make me feel pretty good. But as we've been pulling back, the AD lines remained very strong here. So TGLS looks interesting. Next up, LEDS. This is Semi-LEDs Corp or Semi-LEDs Corp. The stock ran from about $3 to $32 in 8 weeks. Volume, huge on this move to the upside. But since then, we've lost about 2/3 of the value of the company in the last 6 weeks. So it's extremely volatile, obviously, probably not for everyone. You want to make sure that you're okay with the amount of risk you take here. But this is a stock that had some serious volume coming at the end of May as it broke out above $10. And it never went back and tested the breakout level until this week. So it has gotten back to this 10 level. It seems like this is an area where maybe we'll see this start to pick back up again. If nothing else, maybe just simply a move back up to test the 20-day, which is at 1320. That would be a 30% move from here. So this is a stock that's very capable of moving quickly back to the upside, but you've got to be willing to take some additional risk. Microvision, MVIS. This is a stock that ran up from under $2 to about $22 in 3 or 4 months. And since then has been going mostly sideways. Recently, well, back in May, we got down to about $12, 12.5. We just did it again to start this week, maybe down to around 13. So it seems like maybe we're starting to turn back to the upside. A lot of potential upside, though. Recent high in June was all the way up at about $24, and we're sitting at 15 right now. So definitely a big run to the upside in this stock, but with the recent consolidation, perhaps offering up a pretty nice return in the short term. Next, Playboy Group, PLBY. In about 7 or 8 weeks, we ran from $11 up to 60, above 60. And since then, we've been cut in half, back to 30, 29.38 on the close on Wednesday. Now this one, I'm looking for an area where it could turn around. The breakout above 22 has never been tested. We did have a breakout just below $30, so maybe it turns here, but it just seems like we could be in for one more drop. But anything down around that 21.5, 22 level would really start to get interesting on PLBY. I know we're at 29. It seems like, hey, 21, 22 is far, as a reach. But when you think about how far we've dropped in just the last 10 weeks, 60 something to 30 something, another $7 really seems like it's certainly possible. SIG, This is Signet Jewelers. We had a big gap up on heavy volume back in June, opening at 65, running all the way up to 85. Well, we came back down and moved into that gap support zone between 60 and 65. And now we've just climbed back above to 68.57. So this is one that had a huge move, pulled back into the gap support zone. I think kind of was just sleeping for a little while, and it looks like maybe starting to wake back up, moving above that 65 gap resistance area. I would like to see it get through the moving averages, but anything down in the low to mid 60s seems like a pretty good reward to risk opportunity on a stock that had been very hot. Last one I have for you is ATOS, another very big mover. In mid-April, the stock was $1.50, and by the end of June, it was $10. So 6-7 bagger in about 8 or 9 weeks. But we have pulled back to the 4 level from 10, so we've dropped about 60% off the high. And you can see the last time we had a significant pullback back in June, we held right around the $4 area, $3.80 to $4. That's what we're doing again right here. So this is another one that's been sleeping for a little while, but maybe this is a level where it's ready to take off again. Again, very, very aggressive stock. So please make sure you're willing to take more than your ordinary amount of risk on a stock like this. All right, U.S. versus global markets. So I thought what we would do is just take a real quick look. I'm going to pull up the S&P 500 and first compare it to the German DAX. We'll make sure we get this on a relative chart with a solid line. And we'll go back 3 years. So the S&P 500 versus the German DAX right now is getting very close to a key high from about 10 months ago. October of 2020, we reached this 0.285 level, pulled back a little bit, which indicated Germany was actually outperforming. But now we've got the US again moving up faster than Germany. So the SPX versus the DAX looks pretty strong here. Next up, let's look at the US versus China. So we'll look at the S&P 500 versus the Shanghai. Got a double top in play, but we have been trending higher now for well over a year, probably about 15 or 16 months. A breakout above 1.24 would continue to bode very well for US stocks. All right, moving over to Japan and the Nikkei. The S&P 500 just broke out. Pretty significant breakout versus the Nikkei. So we're seeing the S&P 500 looking very strong against the German DAX, against the China Shanghai, and then also the Japan Nikkei average. And then the final one I wanted to look at was the Hang Seng, which is in Hong Kong. And you can see big breakout here. So when you're looking at the S&P 500 versus the other major global markets around the world, the S&P 500 is outperforming and has been in the case of the Hang Seng now for quite some time. So I just don't think it makes sense if you're trying to, do the best you can with your portfolio. I don't know that it makes a whole lot of sense to do a lot of international investing. The charts are telling us that the S&P 500 continues to be the better alternative. So I would stick with that for now. All right, earnings spotlight. A number of companies reporting after hours. Of course, in the morning, we'll have a number more coming out. And earnings season really beginning to pick up. Next week, we're going to have hundreds and hundreds and hundreds of companies reporting, including some of the big names like Apple, Microsoft, Facebook, and so forth. Tomorrow morning, we've got Abbott Labs, Danaher, AT&T, Union Pacific, Biogen. Let's see, what else do we have? DR Horton, a home builder, Southwest Airlines, number of those companies will be reporting tomorrow. After the bell today, on Wednesday, we had some companies come out, though. One was Texas Instruments. TXN. AD line looks great. Big move up, sideways consolidation, big day on Wednesday. Stock was up 3.45%. Volume picked up. Looked like maybe we're ready to go. And then earnings came out. Good news is earnings were strong. Market was expecting $1.82 for Texas Instruments. Came in at $2.05. But of all the companies I looked at after hours, Texas Instruments was down the most, down 4.6%. So back down well below the breakout level, back down below the moving averages, and we'll see whether or not recent lows hold to the downside. Here's the interesting part when I was looking at earnings tonight. I saw 16 out of the 18 earnings reports I looked at, 16 out of 18 beat estimates. 16 out of 18. Of those 16 that beat, only 5 of them showed prices that were up in after hours. Now, you would think that if a company beats its earnings estimate, it should go higher. But that's not always the case because, again, it's a buy on rumor, sell on news kind of market. We get these pre-earnings advances. Wall Street builds up prices. They buy ahead of the reports. And then the reports come out. There's no buyers other than retail traders. Wall Street's already gotten in. And so that's why many times you'll see these buy on news, sell on, or excuse me, buy on rumor, sell on news type events. So Texas Instruments down. One of the best reactions was on CSX, which has been going down. It's in the railroad group, has not been a good group. They did beat 40 cents versus 37 cents, but they had been selling off and they were up 3% after hours. So Texas Instruments was the worst reaction to earnings after hours. CSX was the best. Las Vegas Sands down 3.3% after hours. Expected loss was 19 cents, came in at 26 cents. Been in a downtrend, but last 3 days were up. We're going to see some of that cut out based on what we saw after hours tonight. So it looks like maybe we're going to move back down toward the recent low. Number of companies came out though. Most came in much better than expected. Really solid report from EFX, Discover Financial, DFS, big earnings beat. Whirlpool, big earnings beat. All 3 of those companies pretty flat in after hours trading though. All right, last thing, the 3 you must see. Let's start off with Cassava Sciences. Huge mover back in January, February. Momentum sleeper for a few months. Started picking back up, broke out on Wednesday on increasing volume. This stock has been up almost $50 the last 3 days from the open on Monday. So very fast mover for sure. DOMO, this is Domo Inc., just breaking out. Volume pretty solid. This is in the software space. I think this chart looks really good after months of sideways consolidation. I think it's trending higher now. Last one, InMode, INMD, after again sideways consolidating for about a month. Big volume, gapped up to 100, went back down, tested 100, and is now breaking out again. Looks strong as well. All right, that's it for me today. I want to thank everybody for tuning in. I'll be back next Monday for your next Trading Places Live over at earningsbeats.com. I want to wish everybody a great Thursday. Enjoy your Friday and weekend ahead. Hopefully see you on Monday over at Earnings Beats. Take care. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.